Hey, what's up guys? So in this video, we're going to go through a step-by-step tutorial of how you want to pick stocks and index funds to invest in. I'm going to go through a step-by-step guide of building a portfolio that's going to give you long-term wealth. This video is absolutely perfect for beginners because what I'll be doing is jumping onto the computer, starting straight from Google, going through every single step of how I pick the stocks, how I invest in them, what broker I use to do that, etc, etc. What I'll also be doing on this video is investing £500 live on the video of my own money, just to show you that I'm not going to miss out any part of the process. Right guys, before we get started, I want to mention a couple of things. The first thing is that this is going to be a long-term investment, okay? So the technique we're going to use is we're going to be investing a small amount of money every single month for the next 5, 10 or 15 years, depending on how long you want to build this portfolio for. Now, the reason why we're doing this is because we're trying to take advantage of an extremely important and powerful technique called compounding, okay? This is probably one of the best things I've discovered recently, because it makes an absolutely massive difference for people who, just like me and you, probably don't have much experience in investing. We're not basically day traders here trying to make a quick profit or a quick buck by trading stocks that we have absolutely no idea about. Okay, so this is going to be a long-term investment, taking full advantage of compounding. The second thing I want to mention, and I kind of alluded to this, is that you don't need much money at all to do this. Okay, you need at least a minimum of £50 or just £100. I recommend £100 per month to really get started and take advantage of this kind of way of investing. Okay, but the main thing we want to do is you want to stay in the market for as long as possible, not try to time the market. Okay? So guys, if you like the sound of this video, then please do smash that like button, and I'll tell you why. Firstly, I'll be investing £500 of my own money just to show you guys how this whole process works. Complete transparency. Secondly, these videos, they take a very long time to make, and it only takes 1 second to like, so it's very much appreciated. Also guys, if you haven't already, subscribe to the channel so you don't miss out on future videos just like this one. With that said guys, let's now get on to the video. Right guys, step one, the first thing we want to do is think about how much can you afford to invest every single month. Now this doesn't have to be a huge amount, it can be as little as £50 per month, it really does not matter. What we're trying to do here is invest consistently over a long period of time to take advantage of compounding. So don't worry about those people who tell you need tens of thousands of pounds to invest in the stock market for it to be worthwhile. Forget about them, do what's best for you. In this tutorial, we're going to assume a budget of £500 per month. Okay, so that's the exact amount I'm going to invest here today live, so stay tuned guys and check it out. Step number two, we want to now start thinking about the individual stocks and index funds we want to invest in to build this portfolio. Okay, so let's start with the individual stocks. Now in this tutorial, I'm going to invest in 5 different companies. I want to pick stocks that give us both income, okay, and high growth. Right, so what do I mean by that? So I recommend having about 40% of your portfolio being dividend paying stocks, okay? And dividend paying stocks are basically a way for a company, to pay you for holding their stock. So it's a great way to earn some money, earn some income during this period, because we're going to be investing for a long period of time. Okay, you want to see some sort of money coming in as income. It's a great passive income source as well. Then recommend another 40% of your portfolio being in high growth stocks. So these are the companies that are going to double, triple, quadruple over the next 10 or 15 years. These are the ones where when we come to sell at the end of our portfolio are going to give us the biggest pot, hopefully the biggest chunk of money. And lastly, the 20% in high risk stocks. So these ones we're going to just, take a punt at a company that's maybe had a hard time recently. Maybe the share price has crashed and it's about to bounce again. We're just going to take a punt and take a risk. Now the index funds we're going to invest in are a bit different because they're already diversified, because they contain hundreds if not thousands of companies, both with dividend paying and high growth stocks within them. Okay, so the strategy I like to use, and I'll take you through it, is I like to pick index funds in different continents. So I'm going to pick one in the US, one in Europe, one in Asia, just to cover ourselves. Okay, so I'll show you how that's done. Step number 3, now we want to think about the brokers we want to use to buy these stocks and index funds. Okay, so for the individual stocks, I'll be using a platform called Trading 212. It's a commission-free trading platform, which is extremely important because we're going to be buying stocks every single month or very frequently for a long period of time, so we don't want to be paying commission every single time. So make sure whatever broker you use is commission-free. For the index funds, I'll be using a broker called Vanguard. Now Vanguard have been around for a very long time. They're reliable, they're secure, and They've got great customer service, and they've got a wide range of index funds to pick from. Now you can use Trading 212 to also buy index funds, but they're a bit limited. So I prefer to use Vanguard. So there it is, guys. We've got our budget. Okay, we know what kind of stocks we want to pick. We know what kind of index funds we want to pick. We know what kind of brokers we're going to use. So let's now jump onto the computer and let me show you exactly how this all works. And I'm going to invest £500, my own money, right here, right now. Alright guys, so I was going to jump onto the computer, but I found Trading 212's website not great to use, to be honest. It's much better using it on the app. So let's go through the app and then let's go through the whole process. Okay, so let's start from here. I'm already logged into my account because I've already got an account. Now, before you sign up, I'd recommend you either go for an ISA account to begin with, because you get a £20,000 allowance per year by the government to invest in tax-free. Okay, so unless you invest in more than 20 grand per year, just open up an ISA account, because you're going to get, you get all the profits you make from it. You complete tax-free. What I do with my family is I use my allowance of £20,000, I use my wife's allowance for £20,000, and we also use my son's allowance of £9,000. So we as a family can invest £49,000 per year tax-free. Every profit gets tax-free. We don't have to even tell HMRC about it. Just transfer it to your account and use it. Okay, so that's something to think about before you create an account. So here we are in the Trading 200 app. So the first one we do is deposit funds. Okay, so we're going to set this to £500, and here we want to do recurring. Okay, so remember we said we're going to be investing consistently month on month. Okay, so you pick the month and you can pick the date, or you can do every 2 months, every 6 months, however you feel comfortable. But make sure you do it recurring, because you want to automate this process as much as possible. So in this case, I'm not going to set anything because we've already got a recurring thing on this account. I'm just going to confirm that and then press pay. Easy as that. Yeah. Scary how quick that is, right? Okay, so now we've got our funds invested into the account. Now we'll go hit this hourglass here, and now this is where we search our stocks. So if we click the stocks bit here, we've actually got categories of different stocks. So let's start with the 2 dividend stocks we want to pick. So if you remember earlier, we said we want 40% of our portfolio to be dividend stocks. So let's pick 2 here. So we can click dividends. We can go through a list of different stocks, dividend paying stocks. So one I've invested in already is BP, and I like BP because its share price gone down quite a bit actually, and the yields gone up quite high. So if I have a look here, if you look at the company's details, you can see key ratios. This is the bit you want to look out for. So dividend yield is 9.85%, which is pretty good. That's the return you can get from dividend payments, right? So that's quite good. That's a good amount. And BP's a pretty solid UK, FTSE 100 company. They've had a lot of investment recently from the Middle East actually. So I feel confident this is going to bounce back and get back to its normal levels of around 560p. It's at 360p. So let's buy this one. Press buy. We can just click here. Remember, we're going to do £100, right? So 100 here. Okay, so that's about 27.44 shares. And that's it. Review order. Buy commission free. Remember, it's commission free, not paying any commission. And buy. And done. It's there. So if we go over here, to our portfolio, home, look down here, block for pending orders. Okay, so it's ready there. We've got £100 and that's going to be blocked because it is a weekend right now. That's not why it's not executed immediately. But obviously when Monday come Monday, then this will be processed. Right, next thing. So we want to pick another dividend paying stock. Right, so you can go through this list and have a look. So if we look at something like Wells Fargo, for example, if we look down, you're paying a dividend of 6.75%, which is pretty good. You've got AT&T, all these big American companies, but one I invested in recently, which I like the sound of, is Coca-Cola. Now, the reason why I do it in this way, so this is, oh, hang on. If we have to go back up here. So Coca-Cola, so they also pay dividends too. Not much, 3.42%. But for me, Coca-Cola is very, very safe. It's a safe investment. And what I like to do whenever I invest in companies is I like to know what it's all about. I like to understand it, because it's very easy to understand what Coca-Cola's business is. You see the drinks everywhere. You see if they're selling that stuff, and they're always selling Coke. Who does not drink Coke, right? Um, but yeah, I like to pick companies that I know about, that I find that I can see in my everyday life. I like to pick those type of companies because, the more you understand what companies you're investing in, the more successful investor you'll be. So let's go ahead and buy some of this. £100 in that. So I get 2.58 shares there. Reviewed order. Again, commission free. Number of shares. Boom. Send buy order. Done. If we go back to our home page here, if we click down here, so now we've got blocked for pending orders 200 now. Okay, again, it's a weekend, so it's not going to process immediately. If it was during the trading hours on a weekday, then it would have processed immediately. It's very fast. It would have done it immediately. But anyway, that's that. Right, guys, let's now pick our high growth stocks. So we're going to pick two of those. Now you can go here and check these high growth stocks yourself. So one of the ones that I've picked recently is Netflix. Now Netflix, for me, again, I like to invest in things that I know about. I like to invest in companies that there's not much understanding required, and I can see if they're doing well or not just by my everyday life. So Netflix has been obviously it's something that has been growing in the last 10 years quite significantly, but also I feel as if it's going to grow even more in the next 10 years. More and more people I believe, will be sign up with Netflix, especially countries like Asia. When they come out of poverty, they like using their phones. They're a lot more tech savvy, so they will be using their phones to watch things. And I feel Netflix is going to be a lot bigger than it is today in the next 10 years. So we're going to buy £100 worth of that today, right? So 100 again, and review order. Commission free again, and if you notice here, it says 0.3 number of shares, so that's because we're buying a fractional share of Netflix. Netflix is actually worth $400 for one share, and the cool thing about trading 212 is you can buy a fractional share, so you can buy 0.3. So you can that's really good thing to look out for when you're thinking about what broker you want to use. Make sure they offer fractional shares, otherwise you have to buy the whole thing, the whole share every single time. So send buy order, done. We go back to our portfolio bit here, so £300 worth of pending orders blocked. So that's that. So the next one we're going to pick, okay, is for me another company which I know is doing very well right now, but could be doing even better, and that's Tesla. So Tesla, I asked myself, is Tesla going to be selling more cars? Are people going to be buying more cars in 10 years, 15 years time that are going to be electric? And that's definitely a case. So I feel as if Tesla's going to be a big part of that whole change in how people will buy their cars, and more people will be buying electric cars. So Tesla is something that I feel as if I'm confident about doing pretty well in the next few years. So let's buy £100 worth of that as well. Review order, commission free, etc. Send buy order, done. Check it again, 400 pending. Right. So that's that. So now we've got our dividend stocks and our high growth stocks. Let's pick one that we feel is going to be risky. So again, here, let's take a punt. Again, here you've got a high volatility case here. Aston Martin, Premier, all these companies that are very volatile. So you could take a punt at any one of these. But for me, I decided to go with a company called Boeing. So Boeing have been taking quite a massive hit, especially during this whole pandemic, the COVID-19 pandemic. The whole airline industry and anything associated with it has taken a massive hit, but I feel it will be very strong when things start to go back to normality, or whenever that is. So I'm going to buy stock in Boeing. So let's buy here, put £100, review the order, again commission free, done. So we've got £500. Now, at the end of the day, here are my investments. So I've got Boeing, BP, Coca-Cola, Netflix, and Tesla. These are all the shares, the 5 stocks that I invested in today. I've already got large holdings in each of them, which is why the figures are a lot bigger, because I've started investing in these about a month ago already. And that's it, guys. That's all. Let's now move on to the index funds part, where we'll go over to Vanguard, and this time I will use my computer to show you. Guys, now we're going to invest in index funds. Okay, we're going to use Vanguard. So let's start by setting up an account. Right, so if you come up here, what we offer, they've got options there. You can open up a normal Vanguard, general account, but what I recommend is open up an ISA account if you're not going to invest more than 20 grand per year. Okay, so that's what I've done. So if you go here, open up account, start my application, terms and conditions, yep. Now you get to this section here. Please choose what funds you want to invest in. Okay, so blended funds are basically a combination of equity funds and fixed income funds, which are bonds. Equity funds are just purely equity, and those are the ones you want to go for because they're going to have the most growth. So I'm only going to stick with these for now. Okay, now remember I said it earlier, I like to pick one from each continent. So here in Europe, I'm going to pick DAX, which is the Germans' top 50 most valuable companies, and they are for me. The reason why I picked the German one over the UK one is because I feel as if Germany are going to recover a lot better in terms of as a country and economy, etc., than the UK will after this whole pandemic. So I'm going to go in and put £150 here per month. Now the good thing about Vanguard is you can completely 100% automate this. Okay, so you've got a single payment here which you can just pay up front, but you've got a regular monthly payment here. Okay, so if you're putting in £500 per month into individual stocks, I'd also recommend you put in £500 per month into your different index funds. Okay, so we'll put £150 into this one because we're only going to pick 3 today. All right, so we put £150 here. As you can see here, you've got an ISA allowance, you've got your total regular monthly payment. Next, UK, we're not going to really go for UK, Japan, or Asia Pacific. So I'm going to go for FTSE developed Asia Pacific, excluding Japan. So these are all the other countries like China, all the other developed countries like China, Singapore, those type of countries. So I'm going to put £150 into here. The reason why I've done it excluding Japan is because Japan's economy has been struggling, quite a lot recently. They've not been growing as much. They've had a lot of difficulty over there. So I don't see much growth from Japan in the next 10-15 years. And I definitely see it from, other countries like China, India. Those kind of places are going to be a lot more exciting in the future. And then finally, US. We'll go for the classic S&P 500, which is the top 500 US companies, and this is like a go-to index fund for almost everyone. Anyone who invests in index funds is always going to pick an S&P 500 based fund because they're just solid. And yeah, so you can see £500 of regular monthly payment, and this is completely automated. If you set this up, hit next, and continue with this process and submit it, that's it. You don't have to worry about it anymore. Okay, that's it, guys. That's the end of the video. So remember, guys, invest what you can afford, invest consistently, stay determined, stay disciplined. Okay, so don't give up after 1 year or 2 years if you feel like your portfolio is going down. Just stick with it. Let's see how long it can last for 10 years. 10 years is your optimum amount of time you want to leave this investment in there for, and build it. Take advantage of compounding every single time you get a dividend payment. You can pull it out if you want, but I recommend reinvesting the dividends back into your portfolio to make the most of compounding. And before you know it, you're going to have a big pot. And every time that big pot increases in value, you're going to see a massive return. So good luck, everyone. See you guys next time.